Hello, and good evening, everyone. Welcome to Paytm Money Talk. The topic for today is Unlock the Tech Tracer investing in Nifty IT Index Fund. So, when you talk about IT investing, it's one of the biggest sector in India. It contributes almost 9% of Indian GDP. It has the size is more than 245 billion dollar, and it contributes more than 56% of the global outsourcing industry. So if you look about the IT sector, when we saw the market making new high, it's almost at the 19,000 level. But somehow IT sector is not doing that well. It has been correcting, consolidating for last 18 months. Now the question is it the right time? In fact, to discuss about this particular topic, this masterclass is all about. I'm Neeraj Gogoi, your presenter, your host for the show, and this talk is powered by Paytm Money. Okay, so before I start, let me introduce very quickly what the Paytm Money Talk is all about. Uh, Investing is such a area where one need to continuously upgrade one's skill and the knowledge. In fact, it's a continuous process, and therefore, if you are somebody looking for new ideas, new investment strategies, this masterclass is absolutely for you. So what we do here is we get the experts from the industry in different areas. You talk about trading, you talk about investing, mutual fund, and then we share ideas. What is the next best thing to do? So today, to discuss about investing about IT industry, we have got our guest today, and she is Vandana Trivedi. So let me introduce my guest. She is a head of institutional business and passive. Vandana joined Axis AMC in 2023 to spearhead the institutional business and passive. She has over 2 decades of experience in leading various functions in the institutional and distribution verticals across the industry. Before joining Axis, she was with Bandhan AMC, and before that, she was with HSBC and Cholamandalam. So, Vandana, welcome to the show.
Yeah, thanks a lot, Neeraj. Am I
Yes,
am I
yes,
visible and audible?
absolutely. Vandana, you are visible.
Yes.
And very
Thanks a lot.
welcome and
Thanks,
good evening.
thanks for the introduction. Good to always be here on the Paytm platform.
Great. What a day, Vandana. Yesterday, we made a new all-time high. Market is Nifty is almost at 19,000, few points away, right? And at the same time, we have got, different sectors that have been performing excellently. You talk about different sectors, real estate, infrastructure, so many sectors performing. But there are some sectors which has not performed that well as well. But it
Right.
says that in investment, you need to buy stocks or you need to invest, which is not doing that well at this point of time. That is where you can get the maximum return in the coming days. So to talk about that, the IT industry specifically. So what do you think, Vandana? First, let's talk about the market, and then we are going to
Mhm.
talk about what are the specific nitty gritty. And you have launched a new fund as well, that is
That's right.
IT fund. So it
That's
will be
right.
exciting to talk about that. So, Vandana, to start with, what do you think
Yes.
about the market? How the market is look like at this point of time?
See, a lot of macros are going fine for the market. We can take this sector wise, but I know that we want to talk IT today.
Yes.
But not only for India, but globally as well, there seems to be a kind of a reprieve
Mhm.
from all the negative headline numbers on macro that we've been hearing about right through, say, 2022. What's probably leading to this rally, amongst other important domestic factors, is that the Fed finally paused, which has been a huge relief for markets worldwide. And that has kind of further strengthened the rally that was already underway in India. India, of course, structurally, you really do not need an expert to or anyone from the industry to tell you this. Structurally, we are the fastest growing economy in the world today. We have a lot of things going for us in our favor. There is a lot of thrust on infrastructure. There is a lot of thrust on digitization, and clearly the strength of the country is felt in the kind of FPI flows that we've seen. So it's also a liquidity supported rally. It's the liquidity is just the tailwind to a very favorable macro environment that we are seeing domestically, and a bit of a better positive signs on macros from a global construct. So I guess these are some of the things that have led to the rally, and obviously you're aware that our central banker is also on a pause now. Sectors like real estate, of course, slave to the interest rate environment as much as everything else, and that's why some of those sectors doing well. Yeah.
Wonderful. So yes, as say as it is said that India is the brightest spot in the world economy today, when probably Western countries are almost facing recession. Now the question is, let's talk about the IT industry. Last 18 months or so, it is in the correction mode, and of late also when we are seeing last few months, when our markets start rallying, we saw the IT index actually moving kind of a sideways or consolidating. Now, do you think how long do you think that consolidation is going to be there for IT industry, and when can we see that again? IT industry is back to the focus.
Certainly. So, what I'd like to do is maybe go one step backwards
Yes.
to answer the question on till when I think consolidation will be underway, right? So, if you look at how the tech industry has evolved, and we could actually break that down into decades, say right
Correct.
from the 1980s itself,
Hmm.
or look at just the 2000s and see the various phases, right? So, maybe the 80s started off with the personal computer revolution for the tech industry. If
Hmm.
that's going a little too far in the distance, what really happened in the 2000s was a Y2K led kind of churn in the industry, which then a number of tech firms, including firms in India, took advantage of. Right, move a little further ahead in 2003, 2004, you had more of an ERP or enterprise led software implementation, solution implementations, which gathered steam. And that pretty much guided how software companies, sorry about that. There is some problem with the video, but I'll go on. That pretty much guided how software companies in India evolved to the emerging situation or the emerging needs of global businesses. Move on to 2007-8. You had the GFC period, where there was a GFC-led churn, which again, as we are all aware, our Indian software companies actually rose to come up to speed with the requirements that were needed of them to be able to cater to the world after the GFC, right? The 2013-14 was and it started in 2013-14, but assumed steam sometime in 16-17, which was the entire digitalization wave, right? So till then you had some of your large cap players, right? Till about 2016-17, you had some of your large cap players doing well, customizing themselves, restructuring themselves to the evolving technology trends, and indulging in capital spends to meet the new order at every phase, right? It was in 2016-17 that the
Hmm.
mid cap space also in the IT sector, I mean, also caught up, right? And those were the names which then started participating in the digitalization led solution structure which technology companies have were able to offer. This also was strengthened by the fact that a lot of PE interest started coming into the mid cap IT stock space, right? So what you're seeing right now is a broad based strength in the Indian IT industry, not only restricted to the top companies in the index, the large cap ones and the more familiar names, but also trickling down to the mid cap names who have really done well to consolidate their positions and shore up capital and show up revenues. So that's where we are now. To answer your question, move to 2020 in the post COVID. Actually, not post COVID.
Mhm.
COVID itself was a great time for the Indian tech industry, right? It's a bit of a dichotomy to talk about COVID and say a great time, but the Indian tech infrastructure or ecosystem really grew up to meet the challenges that COVID brought about. And they started establishing themselves in areas such as cloud computing, cybersecurity, all of which is pretty much the staple of how the world in the technology space is evolving today, right? So that's where we are. So this is a phase, really, Neeraj, where I think a lot of capex spend has happened. A
Mhm.
lot of capex spend has happened to modernize Indian IT, right? When I say modernize Indian IT, I mean to kind of raise up Indian IT to the new demands of cloud computing, software as a service, to actually meet cybersecurity, requirements as a result of moving on to the cloud, to actually be able to customize themselves to an entire new way of working, which is what COVID did, right? And that's the phase where huge investments have happened. Now probably is the time where companies are actually sitting back a bit to see how these investments unfold, to consolidate on these investments.
Mhm.
And that's broadly the phase, in my opinion, that we are going through. As far as revenue numbers beginning to come in goes, our sense is this, and this is the fund house view. Our sense is that over the second half of this financial year, you should actually start seeing revenues come back. The industry body projections for revenue growth for the sector is about 9 to 10%, and we think that we will start seeing those numbers by the second half of this financial year.
Correct. In fact, yesterday we had the AGM of Infosys, and Mr. Nandan Nilekani sound pretty optimistic about,
Yes.
and that's a good sign. Now again, as you said, currently there are massive disruptions happening in terms of chat GPT, artificial intelligence, and so many different things. So how do you think it's going to impact the Indian IT industry? Is are they going to take advantage out of it? And what is your overall assessment?
Sure. Neeraj, see, you actually quoted a result yesterday, and you mentioned what Mr. Nilekani said. So I'll also quote a result which is of a global IT firm. I mean, the largest, if not one of the largest, if not the largest. So Accenture recently, in its results, actually,
Hmm.
they printed a revenue of about $50 billion, and to a question on how much they thought, or how much they attribute it to Chat GPT and or the kind of artificial intelligence kind of solutions and lines of business.
Hmm.
They said it didn't even count up to about $100 million, right? So what I'm trying to say is that artificial intelligence and generative artificial intelligence kind of solutions and systems or ecosystems are new, right?
Hmm.
They have occupied a lot of chatter. They have
Hmm.
occupied a lot of chatter in amongst analysts, in media. But what we have to understand really is that it's just beginning to emerge. Frankly, we don't even have proof of concepts or POCs, as we call it, for the application of AI led innovations in some of or in most of the sectors, right?
Hmm.
So that's where we are as far as chat gpt and AI goes. But clearly, they would lead the growth over the next decade or so. We may still be at the very beginning, but they would certainly, probably, if they get it right, lead the growth. I mean, it's not without reason that Microsoft owns almost 50% of OpenAI, right? OpenAI
Correct.
is the provider of ChatGPT. So clearly, tech companies are exploring these areas. These are very serious areas which could actually change the way we live, we behave, we work, we interact with each other. But in terms of their attribution to revenue, and therefore, how that percolates to stock movements, etc., which is, I guess, what we as investors are also immediately concerned about, it would probably take some time. But the only to answer your question as to, are Indian companies doing something, are they capable of tuning themselves to the evolving trends? Certainly yes. I mean, you look at their movement, from the initial days, again, to rewind to what I just took you through
Hmm.
as history, from the initial days of Y2K processing, where we've only been body shoppers to that extent, to offering ERP or enterprise based solutions, to quickly moving on to cloud computing or software as a service. All of that speaks of their agility to actually tune themselves to how technology is evolving, and where they can fit in to businesses worldwide. So, super confident that the Indian IT space, especially the ones which are seen in index index representatives, certainly stand a very good chance to be at the forefront of some of these innovations.
Wonderful. Now let's talk about the investment opportunities now. Okay. So the valuation has come off in last 18 months or so. So do you think it's providing a very good opportunity to enter IT sector at this point of time?
Okay, thank you for the question, and allow me to just put on my
Yes.
investment wisdom sharing hat a bit here before I get on to that. Clearly, I mean, all of us know that IT did not have a great run in 2022. It's probably already picked up, in that it's pretty much flat for the year. At least it's not negative. If you look at what's happening in the Nasdaq has grown by almost 40% calendar year to
Mhm.
date, and typically our IT index follows suit with a lag. On the face of it, valuation wise, price terms wise, it looks like a lot of correction has happened. Valuations are close to historical averages. The premium of the Nifty IT index versus, say, the Nifty 50, as a broad market index, has again come down to historic levels. So from a price perspective, it certainly looks, if you have to invest, a great time to invest now, right? Now, however, just the investment wisdom had coming up here to say that, see, it's a sectoral fund, right? You are looking at just one sector, as opposed to looking at the entire market to invest, right? For first time investors, I know I have a fund that I'll take you through in a bit, but for first time investors, I would still nudge you to my broad market funds, right?
Mhm.
First time equity investors. But yes, if you want a sector exposure, if you have to take a sector exposure and stand a chance of making better returns than the underlying broad market index, the IT index seems to be the best one to stick to, right? The
Mhm.
last 10-year CAGR of the index has shown that it has outperformed every other sectoral
Mhm.
index out there.
Mhm.
There have been huge drawdowns in periods of extreme global uncertainties and volatilities, but the pullback has been, far more sharper than most other indices. So a choppy ride, but clearly longer term track records showing you that the index adds value, the sector adds value. And to add to that, the cherry on the cake is that valuations are better than what they've been in the recent past. So yes, a great time to invest in the sector.
Yes, I think one of the very important aspect of investing success is conviction, right? Having a good conviction. And now,
Yes,
since you are coming up with a new fund, 27th, the fund started, opened, right?
that's right.
And you have prepared a fantastic presentations, given all the different data points, different logic. So I would request you to show us the presentation, because
Sure.
it's so well explained,
Sure.
and so okay, so that is where so you can tell us like where to start. This is why IT
Yes.
sector. If
Yeah,
you
so
can.
I
Yeah,
go on to the slide after why IT sector. I start there, Neeraj. The global
yeah,
technology demand is what we want to portray in this slide, right?
correct.
A bit of a background here is that what and I really didn't get a chance to explain that better. What really has led to consolidation in the IT industry? A lot of macroeconomic headwinds has led to consolidation in the IT industry, right?
Mhm,
There has been the looming threat of a recession in the European economies. You already actually have, a recession or close to recession being called in large economies like, say, Germany, at the forefront, maybe China, New Zealand, yes. So, and US was threatening to get into recession, but it's still holding up,
mhm,
right? And that really led to a kind of a macroeconomic uncertainty, which led people to believe that IT spends will come down, and therefore, not a great time for us to be invested in the IT sector. And frankly, the Indian IT industry speaks to the outside world, right? Out of 250 odd billion dollars of revenue, $200 billion is out of exporting or out of exports. So what I want to bring forth with this data point on the slide is that the IT spends as it's underway and as it's expected is not falling, right? It's only
mhm,
growing. So clearly, yes, businesses worldwide are going through stress. There are cost implications, there are cost pressures, but the choice before business
mhm,
heads today is not whether they have to engage or they want to engage in IT and digitization spends. The question before them is, how do we fund the spend, right? The question is not whether I should go in for the spend, right? The question only is now, how do I fund this spend, which would mean that a lot of non-strategic other items would see a cut, but IT spends will continue to go. So that's to set the context to you. Besides that, what we see in India, or rather worldwide also, how as a lay investor, we look at some of the companies in the sector, which may not be exactly the right way to look at it, is how has the past year fared, right?
mhm,
Or how does the most recent period look like? But bear in mind, a number of these companies are sitting on contracts which still have 2 to 3 more years to go. So their order book is already complete and thriving well, and it's in fact only growing. So clearly, the global demand continues to be robust. There may be a bit of more careful and nuanced selection that customers would do in terms of whom they employ for IT service needs. But there is no dearth of demand, or rather, there is no dearth of growth in demand. So that's the point that we wanted to kind of specify in this slide. And then what I want to do is, want to show you how Indian players stack up, right? So because the fund is a local domestic IT index fund, and therefore the slide that we have in front of you is, we want to show you how Indian players stack up. Of course, the Indian IT index consists of 10 different companies. Some of the large cap ones, there are, TCS, Infosys, HCL Tech, Wipro, all of them obviously doing very well. But there are also a bunch of very strongly performing mid cap companies, right? Like Persistent, like
uh,
LTI, like TechM, right? What we
Vandana,
want to show you, yeah.
yeah, sorry for interruption. Vandana, are we still in the same slide, or we need to change the slide?
I moved on to, please, sorry, how do Indian players stack up?
Yeah. Okay, correct.
Yeah.
Perfect.
Yeah.
Yeah, we are
So
there.
yeah, just to come back once again, why are we talking about Indian players? Because we are investing in the Indian IT Index Fund. Just sharing with you examples of two of the largest players. These two together form almost 50% of the index. And look at the revenue from digital that has been improving for them. And to give you broad themes on which IT sector globally will move on. Those are digitization, B, cloud computing,
Mhm.
obviously led by digitization in some effect, cyber security, which in turn again is a consequence of what's happening to cloud, the necessity and the use of cloud computing worldwide. Besides, obviously, things such as what companies are going to do to enable themselves to be at the forefront of the AI and ML kind of a revolution, and the other components being really, hardware and other the business process, the BPM part of the ecosystem. So digital is a key important, a tailwind, or rather a staple for how these companies perform. And therefore we wanted to show that the share of digital, which is important to determine future revenue, is steadily growing for some of the largest peers. I move on to the next slide, which is called as recognizing Indian capability. Are we on the same page,
Yeah.
Neeraj?
Yes. Yes.
Yeah, cool. So here, what we've done is, we've just used a third party, verification, more like a social proof, right? There are very well respected research houses in the sector, or who work for the sector, who basically do surveys with business or enterprise owners and ask them to kind of rank various IT companies on two broad fronts. One is execution, and another is innovation. Clearly, you would appreciate that for any sector, for any business, these are the two important elements of success. And there are 10 ranks given for various IT companies, both Indian and worldwide. And you can see that across the board for various parameters, be it execution or innovation, we have 5 out of 10 top companies being Indian names. And it's no coincidence that all of these names are also a part of the IT index, which is what this new fund from Axis Mutual Fund is about. So that's as far as what third parties have to show in terms of a proof or a validation of the strength of Indian IT companies. I move on to the next slide, which basically so I just made a so this slide is Indian IT continues to gain
Yeah.
share. Neeraj, if you can please move on there.
Yes. Yes.
So basically, I just made a comment that 200 out of $245 billion of revenues is export facing for India, right? Which also means to see how do we stack up vis-a-vis global players. How do we stack up in terms of our market share globally? So we just here show you the year-on-year growth in USD terms, basically percentages of growth of how our share is growing with respect to some of the global peers, or with respect to what we want, or where our positioning is in the global arena. And clearly you can see that are led by our deal wins and the revenues that we are mapping. We are a significant part of the overall global IT pie. And Indian IT firms today constitute a very healthy, almost a 50% kind of a share over in global contracts. And obviously the growth in terms of our exports has been only clocking very, very handsome gains. So that's to show the strength of the Indian IT firms in the overall global context. So the earlier slide was about survey findings. This slide is about real numbers. I move on to the next slide, which is where how which is basically how are Indian companies gaining market share. Clearly, over the years from 2005 onwards, we have mapped the growth of Indian IT companies in the overall market share, and here you see that we are almost close to 30% of share in the global piece. Again, showing numbers in terms of not only revenues, but also in terms of revenues and deals won, but also in terms of market share. Yeah, I move on to why IT now. We spoke about this a bit. before why IT now, to reiterate, a sector you should opt for only if you have the risk appetite for the sector. Mind you, sectors are concentrated bets, and when we say long term as the investment objective of the fund, we really mean long term. You may see sporadic pullbacks and drawdowns, but really what we intend seeing is for you to have a very long time frame, especially with respect to concentrated bets like sectoral allocations. Clearly, IT service spends are expected to grow at a rate of about 9 to 10% CAGR, which is what the chart on the left hand side shows. And also that, just like, I mean, there are numbers, I think we'll take you through them as well, as to how there have been drawdowns with every global macroeconomic volatility, but then how sharp the pullbacks have been as well. Clearly, Indian companies vis-a-vis global peers have stood out in terms of their stability, both on the way down and also as they moved up. So the chart on the right hand side really compares names like Indian firms, large names like TCS, Infi, Wipro, with some of the global larger peers like Accenture and Capgemini. Yeah, this is the slide which, the next one, which is bounce back stronger than market, which I think is important for
Right.
us to understand, not only in the context of the past, but also in the context of what's happening in the present, and to deal with the fund and, in your investment portfolio over further periods of volatility. I just want to bring in, before I get a bit more into the slide, I just want to bring in, and you must, look into this report, which is a recent release by NASSCOM. They obviously, they're talking about the IT sector, the outlook for the IT sector, etc. They're saying that, businesses worldwide, and this is not IT specifically, but businesses worldwide today have realized that there is no new normal. It is
Mm-hmm.
just that there is no normal, right?
Mm-hmm.
COVID has just taught us that,
Mm-hmm.
like nothing else, right? And everything else that's following COVID. Just as you thought that you got past the COVID imposed supply chain, disruptions, and therefore inflation, which in turn had a bearing on interest rates, which in turn had a bearing on IT spends, and therefore how IT hasn't done too well last year, etc. They're all obviously very correlated. Just as you thought that you had navigated all of that, you suddenly had a geopolitical issue in the Russian, side of the world, where Russia attacked Ukraine, and then you realized that it had a significant bearing on commodity prices, right? You never know what shows up next, so there is no normal, as NASSCOM so beautifully puts it, and therefore Indian IT firms, businesses worldwide have recognized that, and they want to get prepared for that, right? They want to build businesses for that, and so is the case with IT firms as well. As far as Indian IT firms go, if we were to track the three large, significantly market impacting situations that showed up, one was 2007-8, when we had the global
Mm-hmm.
financial crisis, or GFC as we like to call it in our industry. I'm sorry, I've been using GFC. I mean the global financial crisis. And again, here you look at how the purple line is the Nifty 50 movement, which is a broad market, and the orange line is the Nifty IT Index, which is the index that this new fund from Axis will be tracking. The fund did not fall as much. The index, sorry, did not fall as much. But the look at the pullback. So with a 50+% of a fall, which was in line with Nifty 50, 1 year after that, the pullback was 150%. So that's a sector for you, right? That's how sectors behave. That's how sectoral allocations behave. The only data shows that IT sector is here to stay, and therefore longer period returns of IT sector has been clearly head and shoulders above most other sectors. That's why the preference for IT as a sector. You look at the next phase, which was what we call as a taper tantrum. Basically, it just alludes to the Fed. The Fed actually tightening its balance sheet. This was again after the global financial crisis. Here again, you see that the IT index fell lesser than the broad market and also
Mhm.
rose up far better than the broad market, right? The most recent example being COVID. COVID, there were some real tailwinds to IT, in the sense that business models changed, and therefore the requirement for every company to reach out for IT services to kind of suit the new normal. And clearly that's evident in how the IT index pulled back since COVID as well. So these are just examples, anecdotal, yes, but clearly all of them very relevant, once in a lifetime kind of events, which do impact market moves. And this is how the Nifty IT index is performed in each of those situations. We I Move on to another validation of performance really in the next slide, which is called consistent performance ideal for long term wealth creation.
Mhm.
Long term again is the key word here. What we did was, and again, this is to revalidate some of the points that I have already mentioned in favor of the sector. Clearly, nothing speaks like numbers, and therefore these numbers on the slide. So forgive us if this just seems like too many numbers for your consumption. But when we analyzed the 1 year returns, right, the calendar year returns since 2004 till the last year, for the Nifty IT index, 9 out of 19 years, the IT index outperformed its broad market,
Mhm.
the broad market Nifty 50 index. The other important point, so what this means is that, this does not mean that an IT index allocation should replace your Nifty 50 allocation, right? What it means is that it tries to give you a kind of a benchmark, or for you to contextualize how an IT index performance or return behaves vis-a-vis what we are also familiar with, which is the Nifty 50 index. But what is more interesting is the number on the right hand side, which basically, I think this compares like to like, which just basically compares all sectors, right? This is 10-year CAGR, so 10-year performance of various sectors. And as you can see, the IT index is right there at the top with an 18.5% annualized returns over the last 10 years, which is way above, its closest peer, which is the Nifty Financial Services Index at about 15%. So, to reiterate my point, if you need to add a sector to your portfolio, this has to be it. And it's just a cherry on your cake that valuations are better off now. And you can already see leading indicators in how the Nasdaq is behaving, with the kind of performance uptick that we have seen in the last 6 months, year to date, that is 2023. And all of them augur as good indications for us to have some amount of the IT index in our portfolio. um, Importantly, I move on to the next slide, which is actually SIP performance. Though I
Mhm.
have named it performance, but it actually shows how SIPs in the IT index would have performed vis-a-vis, say, again, the Nifty 50 or even the Nifty 500. But you could just probably focus on how Nifty 50 has done vis-a-vis IT index. Clearly, over 5 years or 7 years or 10 years, the SIP returns from the Nifty IT index has been in the vicinity of about 300 odd basis points on an average of outperformance over an SIP of a similar amount, which is, we've assumed investment of 10,000 rupees each month on the first of every month. But clearly, at least 300 basis points of outperformance over longer tenures has been the track record of SIP performance in a Nifty IT index versus a Nifty 50 index. So, in the previous slide, we showed you about overall sector performance versus the broad market. And here we are showing you the performance, SIP performance of the sector, which is the IT index, versus the broad market. We spoke about valuations. Neeraj brought that up. The next slide speaks about this Nifty IT premium. Has come off quite sharply. What we mean is that the IT index is always at a premium when it comes to valuations to Nifty 50. However, with a dull last year, those premiums have pretty much vanished and they are almost at par with the Nifty 50. So wherever you perceive the expensiveness or otherwise of the Nifty 50 indexes or the broad market is, that's where the sectoral index is at today. So that's where it is available. Nifty IT premium to Nasdaq would probably now look even better because Nasdaq has actually rallied quite substantially. So clearly from a valuation wise, and we are repeatedly talking about Nasdaq because the Nifty IT index follows the Nasdaq. Nasdaq, as you are aware, is almost 50% into 50 or 60% into IT stocks only. Has no financial services in the index. So therefore, a very IT heavyweight index. So therefore, very correlated to how a Nifty IT index would perform. So that's those are numbers to show you about the expensiveness of the sector. I move on to the last slide, which is a summary. Very quickly, we've spoken about all of this. Uh, the reason for underperformance in the last year was that it
Mhm.
was a period of consolidation for the IT industry post COVID. There was a huge amount of investment spends, etc. That businesses worldwide had undertaken, in response to COVID. And there was therefore a period of lull, maybe. Add to that what was happening with central banks globally, actually raising rates and making money expensive, right?
Mhm.
Inflation being very strong and not moving at all. But despite that, as I showed you in what is expected of IT spends globally, and that's true for India as well. Just one more data point. Global growth is expected to grow at about 2.7% this year as
Mhm.
per IMF outlook. But IT spends is in the vicinity of about anywhere between 6 to 7%. So that
Mhm.
continues. There doesn't seem to be that doesn't look like we can afford a pull back in IT spends. What's happening is that from a spate of digitization led spends, businesses are looking today at what are called as cost takeout deals. Basically, it's nothing
Mhm.
but cost optimization, really. It's not cost reduction, it's cost optimization, to be able to draw more bang out of every rupee that a business puts as investment. Now, in every phase of a cost takeout kind of a scenario, which we go through globally, it has been seen that the Indian IT companies end up doing well because obviously we are skilled labor, we are knowledgeable, and we are low cost. So we typically end up doing well when businesses are actually looking at cost optimization. So we therefore expect a recovery in revenue in the second half of FY24. I spoke to you about external data which suggested that Indian IT is way above its peers when it comes to concentration of good credibility, which is what the HFS survey showed. And in terms of price reaction as well, clearly the index has shown that the drawdown is not as sharp and the pullback is significantly better than broad market. Valuations, yeah, we've spoken about it repeatedly. Great time to buy right now is what I'd say. But for longer time frames and for a risk appetite which is way higher than what even a broad market equity risk appetite would be. That's about it, Neeraj, as far as some of the reasons why we want to talk about a Nifty IT Index Fund, and therefore launch one and offer it to customers. So this is an open-end fund, right? And it's an index fund. So what we do is we just mirror or mimic the Nifty IT Total Return Index. We don't do anything else. We do not take any other company here. other than the
Mhm.
companies that are present in the Nifty IT Index. I move on to the slide, which is showing the constituents of the Nifty IT Index, Neeraj, which is called the
Mhm.
Axis Nifty IT Index Fund. Take exposure to strong IT companies with global presence. So here, we have listed out the companies that are a part of the Nifty IT Index. So there is amongst the larger caps, we have TCS, Infosys, Wipro, HCL maybe, and the mid to the lower mid caps being Tech Mahindra, Techm basically, LTI, Mindtree, Persistent, Coforge, Emphasis, and L&T Technology. Basically, it's a nice mix between large and mid cap, clearly, as is evident for you to see, but also importantly from application and enterprise solution driven companies to also companies like LTTS, which is L&T Technology, which are more driven towards technology in the research space, technology in the research in the which cater to research in the product space, right? To give you an example, if tomorrow we want to say tomorrow we have a local automobile company, right? It could be anything. It could be,
Mhm.
say, a Maruti or whoever wants to bring out automated self-driving cars. Then someone like an L&T Technology is the company that would probably end up providing IT solutions. So more of a research driven technology catering space. So it's a nice mix in our opinion, and especially if such important themes like AI and ML are to be dealt with well by these companies, then this pack really is well placed to have a good shot at success. How does this pack come in? As you're aware, in the index, it's arranged in terms of the free float market capitalization that it has. So clearly, this is a capitalization based index, right? I move on to about the Nifty IT Index. Some more data points on information technology sector as a whole. Like I told you, out of 250 or 45 odd billion dollars of revenue for the Indian IT industry, 194 billion dollars is coming from outside. We are the in services exports for the country. IT contributes to 58 to 60% of it.
Yeah.
What this means is
Vandana,
that, yeah,
yeah. Can you just give me a second? I would just like to tell our viewers that if you have got any questions, please feel free. Type your questions in the chat box. And as we progress, Vandana is almost coming to an end and would love to answer your questions. Please feel free. Go ahead and type your questions in the chat box. Vandana,
yeah.
over to you again. Sorry for
Yeah,
interruption.
okay. No problem at all. So, the IT industry contributes to the India growth story. Basically, by being such a large contributor to exports,
Mhm.
IT industry, as you're also aware, is employing more than 50 or 55 lakh employees and only growing. So clearly, huge contributions by the IT industry to the overall well-being of the country as a whole. And like I told you, 10 companies form a part of the index, the details of which I took you through in the previous slide.
Mhm.
The IT companies are also very good dividend paying companies, right? To the
Mhm.
extent of reasonably good dividends that you get, what it does is it just assists in further compounding, right? The money gets invested back into the investment, which is a great way of dealing with investments. It just helps in better compounding. So if the broad market dividend yield number is about 1 plus percent, for the IT index it's about 2 plus percent, so almost double there. We took you through number of stocks, etc. The other important aspect is that the correlation of IT as a sector to the broad market is limited, right?
Mhm.
Because of two reasons. A, IT is global facing, right? So if there are domestic led troubles, it would to a large extent be immune by it. Having said that, the share of domestic business for Indian it is also increasing, thanks to the various astute measures taken by the government around digitization of every almost every sector today. I mean, we keep hearing about UPIs and Aadhars and ONDC platforms, but the amount of work for towards digitization done in other areas like, say, for instance, agriculture, logistics, all of it count to business for the IT sector. You have TCS handling the passport systems, you have Infosys handling the taxation systems.
Mm.
So domestic business is also emerging as a big business for the IT industry, but clearly it offers you a diversification. If you're already invested in the Indian IT markets, investing in this sector also gives you a bit of an exposure to global markets. So that's the other great thing about investing in this sector. I move on to the next slide. Yeah, so it's the same thing. I'll probably just move on. It's dividend yield where we compare sector wise, and clearly, IT does stand out, and therefore the merit of this sector for investments. Just I'll stop here with my last slide. The scheme name is called the Axis Nifty IT Index Fund. Please look out for this when you're investing. Benchmark being the Nifty IT Total Return Index. It's an NFO, so NAV starts at 10 rupees. Minimum investment amount is 5,000. For SIP, it is 1,000 rupees. The fund manager is Hitesh Das, and the fund does have an exit load if you redeem or switch out before 7 days from the date of your investment. That's 0.25% exit load. This is not an actively managed fund. This is an index passive fund which will track the IT index. That's about it from my end as far as the product goes, Neeraj. Very happy to address questions if there are any, or if you
Yeah,
have any comments to make, please.
I think you had it's a fantastic presentation. You have covered almost all the points. There is no doubt in the mind that should one go for IT? Absolutely
Yeah.
yes. Is it the right
Yes.
time? Yes, because the
Yes.
numbers that you have presented, the global growth numbers, the IT spend, the bright, what is the bright futures? So fantastic. So one question that comes to my mind is that, suppose if I have to invest in IT sector, why not I invest directly in TCS, Infosys, Wipro, or L&T Technology instead of investing in that in the index itself, so many stocks? So which one do
Yeah.
you think is a better for a layman investor like me?
Yeah. So, all of us are laymen, firstly, Neeraj.
Yeah.
So, even if
Yeah.
we are doing what we are doing at work, we clearly, we are laymen because we don't understand, we don't have the time to understand every passing, variable that impacts some of
Right.
our investments. We like flexibility, and we like ease. We like assured liquidity as well. So those are some of the reasons why. See, this is an index fund, right?
Mhm.
This is as close as you can get to direct investing, with in terms of, say, costing, right? But at the same time, there are 35,000 IT companies in India, right? There are 27,000 startups. Now, what we're talking about is 10 companies that form a
Mhm.
part of the Nifty IT index. You
Mhm.
can't get more specialized than that. So, clearly we would advocate using the fund route, the index fund route to investments. Ease of transaction, simple to understand, and let a good fund house with a good reputation do the work for you.
Absolutely. Okay, so get a viewer. His Creek Bro. He said already stocks are at all-time high. So does it make sense to invest in IT fund right now?
Hmm.
So that is his first
Yeah,
question, and the second question is what could be
yeah.
the return in next 1 year?
Oh,
His second
okay.
question.
Sure.
Yeah.
Uh, if Crick Bro has any connection to cricket, then I want to say that I want to say that we I mean, we have been watching IPL glued to our TV sets, despite each IPL being better than the other. I would only say that look at indices from the time that they were formed, or rather from the time that they've been tracked. Okay, any
Mhm.
index. I mean, I will not sell IT now. You just pick up any index. It's only grown, right? So to the question whether it's do you should you still invest because markets are at all time highs, I would say that markets are only going to go higher from here. Right, and that's what history has shown. There is no index which is lesser than where it had begun. So yeah, please go ahead and invest. Firstly, into equity as an asset class if you do not have the investment. If you already have equity as an asset class and you're looking for a more concentrated bet, look at the IT sector. The numbers have been shown to you to say why. And therefore, to answer your question about the IT sector as well, future returns, we really, as an AMC employee, a regulations do not allow me to speak
Mhm.
about it. But that's, regulation is something that we use. But really, who can predict future investments? Even if regulations allowed me, I don't think that I would think that I know better, right? So everything that I've taken you through, in terms of past performances, in terms of future potential, in terms of estimations of earnings growth, which industry bodies like NASCOM, etc., have put up, in terms of the massively, commendable governance and quality and skill set that Indian IT companies bring to the table. Clearly you can assume that the sector will not let you down for longer term investment objectives.
Absolutely. This is the sectors who brought lots of pride to India. In fact, India is one of the
Totally.
front runner because of this particular sector and this contribution. Now, again,
Totally.
as an investor, if how much percentage should I be? Because again, being a sectorial investment, there's a risk element that you have already said.
Hmm, 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 hmm.
So how much should I allocate? How much of my total fund should be allocated towards this IT sector fund? That is number one. And if I'm
Yeah.
aggressively bullish on IT sector, because I think that buying at the when the market, when the index is down, stock is down at the bottom, that ensures, or that increases my probability of better return when I buy at the
Hmm,
bottom instead of
hmm.
buying when the momentum is already on. So being
Yeah.
an aggressive investor in IT sectors, being aggressively bullish, how much should I allocate towards my IT, this fund, or otherwise, normally, how much should be
Hmm.
allocated towards IT?
Yeah, sure. So, this is a sector fund, right? Instead of
Yeah.
looking at it as how much should go to the IT industry fund as such, first question to answer is how much do you want in sectoral funds, right?
Hmm. Hmm.
There are various, calculations which I'm sure that, we've all come across. I mean, some of them suggest 5%, some suggest 10%. In my opinion, I think any capital that you can put aside for at least 10 years, you could look at sectoral allocations. Secondly, also probably look at your portfolios, in the sense that
Hmm.
if you have a reasonably large allocation to broad market, right? By broad market I mean, say, to Nifty 50, or to say actively managed large cap funds, flexi cap funds, etc. You'd notice that you're probably already overweight, a sector like, say, the financial services, right?
Hmm.
Because by constitution, our indices are at least 35% plus allocated to financial services. So when you add to sector, then you may say that, okay, fine, maybe, I'm already this much exposed to financial services, whereas I'm only this much exposed to some of the other sectors like IT, right? And that's where you'd
Hmm.
probably, if you had a choice between two sectors, you would then go in favor of the sector which you are underexposed to compared to the other one in your overall other investments. So that's the other way of looking at this. Thirdly, and very importantly, like we know, right? We have seen in our
Hmm.
offices, right? We've seen in our organizations.
Hmm.
We IT spends is a big element of any organization's small, big, or a conglomerate, right? To give you an example, I also lead the institutional
Hmm.
business for Access Mutual Fund, which means that in my job I go and meet CFOs and treasury heads, and we discuss investment opportunities, etc. So, I recently met up with a large steel manufacturer who told me that their company has a 200-member IT team. This, despite the fact that they would have
Mhm.
actually employed the best in of the IT companies in place, right? So
Mhm.
that's the kind of investments that businesses or enterprises today are making in the IT sector, right? On IT as a spend, not in the IT sector. I'm sorry, on IT as a
Mhm.
space, right? There are numerous issues. There is cloud computing to move on to. There are data privacy rules to look at. There are considerations of climate change compliances to look at. All of which everywhere you start with an IT intervention, right? So therefore, all the reasons to actually add IT for a sectoral allocation.
Wonderful. In fact, there's another user, Mr. Mohit Yadav. He requested for review his portfolio. So Mohit, please do one thing. Please write to us because it will take some time and it needs a little bit of analysis as well. Please write to us. We'll review your portfolio and we'll give you our views accordingly. So I think that's wonderful talking to you, Vandana, and no doubt in
Pleasure
my
is
mind
always
or
mine,
our
Neil.
mind, yes, that it's a best time and the market looks good, economy looks good, and as you said,
Certainly.
the things looks good at this point of time. And probably the
Right.
best thing is that to invest in a sector which is about to turn around from the bottom, isn't it? So
Certainly, certainly, yes. So
so
don't look
with
at the rear view and get scared. In fact,
correct.
look at it as an opportunity and look ahead.
Exactly. And thanks all the viewers and thank you so much, Vandana, for spending your
Thanks,
time.
everyone. Thanks, everyone, for your patience. It's been a long session. I hope that it went okay for all of you. Looking forward to more interactions with you. Thank you so much, Neeraj, and everyone at the back end who's supporting us get this going, Vivek, etc. Thank you.
Absolutely. Thank you so much. Thanks.
Thanks. Bye. Bye.